What if I told you that reviewing your insurance could save you hundreds every year, help you avoid being underinsured, and even unlock better coverage for less money? Sounds like a no-brainer, right? But here's the catch. If you don't review your policies regularly, you could be wasting money or leaving dangerous gaps in your protection. So in this video, let's break down what an insurance review actually is, why it matters, when should you be doing it, and finally a step-by-step guide on how to conduct one effectively. Hi, I'm Fer from Dollar Bureau, a personal finance platform that talks about insurance, investments, and financial planning. Alright, let's dive into the first big question. What is an insurance review? Think of an insurance review like a financial health checkup. It's the process of going through all your policies, your life, health, critical illness, personal accident, everything to make sure the coverage is still adequate, cost effective, and aligned with your life today. The goal is simple: keep what's useful, update what's outdated, and get rid of what you don't need. Why is it important to review and update your insurance, you may ask? Well, life changes and your policies need to keep up. If you buy a new home, take a loan, get married, or have a child, your financial responsibilities change overnight, and so should your coverage. An insurance review also makes sure your beneficiaries, coverage amounts, and policy types are up to date. Imagine forgetting to update a life insurance policy after getting married. Your spouse could be left out in your planning previously. And don't forget cost savings. Premiums are a big part of most households' budgets. By comparing insurers or switching to newer, more competitive policies, you can often reduce what you pay while maintaining or even improving coverage. We've helped many clients reduce their insurance premiums by more than half and just did a case study on how we helped a young family save over $5,000 in premiums per year. Finally, insurers regularly launch new products and riders. If you never review, you might miss out on better features, better protection, or even flexible premium options. Trust me, we've seen many old policies that are expensive, including mine when I started Dollar Bureau back in 2019, and not only are they expensive, it was not as comprehensive as what's being offered today. So, it's clear reviews can make a big difference, but when exactly should you sit down and do one? There are key moments in life where a review is absolutely necessary. Number one, struggling with premiums. If paying for insurance feels like a financial burden, it's time to reevaluate. Insurance should give peace of mind, not stress. Number two, family changes. Getting married, getting divorced, having a baby, adopting a child, or losing a loved one. All of these directly affect your coverage needs. Number three, financial changes. Buying a house, taking a car loan, or committing to an education loan means new liabilities. Insurance should cover those. Number four, living situation changes. Buying, selling, or renovating property can change the insured value of your home. Number five, career changes. An increase or decrease in income, it's time for a review. Number six, retirement and aging. As you near retirement, you'll want to review your life cover and think about long-term care needs. Knowing when to review is one thing, but the next step is just as important. How do you actually carry out an insurance review? Here's a simple 5-step process. Step 1. Gather your policies. Put everything in one place: your life, health, CI, ECI, accident, the entire lot. This makes it easy to see overlaps and gaps. Step 2. Calculate how much cover you really need. Use our financial toolkit to calculate how much coverage you need based on income, debts, lifestyle, and goals. As a guideline by the Life Insurance Association of Singapore, you should have death coverage of up to 10 times your annual income, CI coverage of up to 5 times your annual income, ECI coverage of up to 2 times your annual income. If you are above 30, consider adding a cash life supplement or topping up if you already have one. According to a study done by Singlife, the cost of supporting yourself throughout disability is about $3,000 per month in just 2025. The amount is expected to rise by 4% on a yearly basis. And since you can use $600 per year from your Medisave for premiums, it's a no-brainer to bridge this gap. Step 3. Compare current cover versus required coverage. Look for shortfalls. For example, one couple I worked with found gaps of over $150,000 in CI coverage after doing the calculations. They also did not have ECI coverage, and their death coverage was insufficient as their income grew and they have young kids to support now. If they didn't do the review, they would not have realized that they are currently underinsured. Step number 4. Optimize your premiums. As a guideline, CPF suggests insurance premiums shouldn't exceed 15% of your income, while many good advisors recommend staying under 10%. From our experience, you can often get this down to about 5 to 7% if you shop around, provided you're healthy. You can even lower costs by talking to an independent financial advisor who can compare across insurers, getting multiple quotes yourself, or even working with our IFA partners who do the legwork for free. I recently worked with a friend of mine who was paying $6,000 in premiums per year, and he was still underinsured for death, CI, and ECI. After a full optimization, we got him more coverage, even multiple claims for ECI at just 2.7k per year in premiums. That's more than half in premium savings. So imagine how much more you could save if you just did a review. And once you've done all these steps, the last part is to tie it together and see the bigger picture. An insurance review isn't just paperwork, it's how you make sure your coverage keeps up with your life and your wallet. Start by putting all your policies together, calculate how much cover you actually need, find the gaps, then adjust, whether that means topping up, trimming down, or swapping to newer, cheaper policies. And if you feel stuck, please don't guess. Speak to an independent financial advisor who can guide you through your options. I'll leave a link in the description if you want a free insurance review with one of our trusted partners. And if you found this video helpful, don't forget to like, share, and subscribe for more practical financial tips. Thanks for watching. I'll see you in the next video.